Hi, good morning. My name is Gaspar. I'm Spanish and I come from London. I admire you both in many ways, but I would like to know that when looking backwards, what would you have done differently in life in your search for happiness?
Well, I'm 85 and I can't imagine anybody any happier than I am. So, by accident or whatever, I'm sitting here eating exactly what I like to eat, doing in life exactly what I love to do with people I love. So it really doesn't get any better than that. And I did decide fairly early in life that my favorite employer was myself, and I think that presented. I've managed to avoid really aggravation of almost any sort. Really, if you or those around you that you love have health problems or something, I mean that is a real tragedy, and there's not much you can do about it except it. But Charlie and I have really been blessed. I mean, here Charlie is 92, 85, and he's doing every day something that he finds fascinating. I think he probably finds what he is doing at 92 as interesting, as fascinating, as rewarding, as socially productive, as any period you could pick in his life. And so we've been extraordinarily lucky. We're lucky it's a partnership. It's more fun doing things as a partnership. So I've got no complaints. It'd be very churlish of me to have any kind of complaint. And I would say if you're talking about business life, I don't think I would have started with a textile company. Charlie?
Well, looking back, I don't regret that I didn't make more money or become better known or any of those things. I do regret that I didn't wise up as fast as I could have. But there's a blessing in that too. Now that I'm 92, I still have a lot of ignorance left to work on.
Okay, station 4.
Hi, Warren and Charlie. Great to see you. This is Cora and Dan Chen from Talgard Investments of Los Angeles. This annual meeting reminds me of the magical world of Hogwarts, of Harry Potter. This arena is our Hogwarts. Warren, you are our headmaster and Professor Dumbledore.
I haven't read Harry Potter, but I'll take it as a compliment.
Charlie's our headmaster Snape, direct and full of integrity. The magic of long-term, concentrated value investing is real, yet similar to Harry Potter, the rest of the world doesn't believe we exist. My question is for my children watching at home today and the children in the audience. How should they look at stocks when every day in the media they see companies that have never made a dime in their life go IPO, they're dilutive, and they see a lot of very short-term spin. The cycle is getting shorter and shorter. How should they view stocks?
You don't have to really worry about what's going on in IPOs or people making money. People win lotteries every day, but there's no reason to have that affect you at all. You shouldn't be jealous about it. I mean, it's great, if they want to do mathematically unsound things, and one of them occasionally gets lucky and they put the one person on television and the million that contributed to the winnings with the big slice taken out for the state, don't get on there. It's nothing to worry about. Just all you have to do is figure out what makes sense, and you look at buying. When you buy a stock, you get yourself in the mental frame of mind that you're buying a business. And if you don't look at a quote on it for 5 years, that's fine. You don't get a quote on your farm every day or every week or every month. You don't get it on your apartment house if you own one. If you own a McDonald's franchise, you don't get a quote every day. You want to look at your stocks as businesses and think about their performance as businesses. Think about what you pay for them as you would think about buying a business, and let the rest of the world go its own way. You don't want to get into a stupid game just because it's available. And I'm going to say a little bit more about that close to the break. But with that, I'll turn it over to Charlie.
Yeah, well, I think that your children are right to look for people they can trust in dealing with stocks and bonds. Unfortunately, more than half the time, they will fail in a conventional answer. So they really they have a hard problem. If you just listen to your elders, they'll lie to you and spread a lot of folly.
But they really have an easy problem.
What?
In the sense that American business as a whole is going to do fine over time. So the only way that they can...
But not the average client of a stockbroker.
Well, we'll get to that later. The stockbroker will do fine.
Yes, that's true.
Yeah, but they don't have to do that, and we can talk. Well, I'd rather address that just a little later. But just you don't want to worry. You don't want to be. A lot of problems are, Charlie would say, are caused by envy. You don't want to get envious of somebody who's won the lottery or bought an IPO that went up. You have to figure out what makes sense and follow your own course.
If Donald Trump becomes the president of the United States, and recognizing your public criticism of him and your public support for Hillary Clinton, what specific risks, regulatory, policy, or otherwise, do you foresee for Berkshire Hathaway's portfolio of businesses?
That won't be the main problem. Well, government, is a very big factor in our business and in all businesses. I mean, there's the very broad policies that affect practically everybody, and sometimes there can be some pretty specific policies. But I will predict that if either Donald Trump or Hillary Clinton becomes president, and one of them is likely to be, very likely to be, I think Berkshire will continue to do fine. Charlie?
I'm afraid to get into this area.
Yeah, we've operated under we've operated under price controls. I mean, we've had 52% federal taxes applied to our earnings for many years. They were higher at other times, but we've had regulations come along, and in the end, business in this country has done extraordinarily well for a couple of 100 years, and it is adapted to the society, and the society is adapted to business. This is a remarkably attractive place in which to conduct a business. Imagine in a world of practically zero interest rates, American business earning terrific returns on tangible equity. I mean, those are the assets that were actually employed in the business. The numbers are staggering. And, people who've had their money in savings accounts or something that get destroyed. But owners of business, if you look at returns on tangible equity, just check them out sometime. And they have not suffered, even as people who own fixed income instruments have suffered enormously. And farm prices are down now. Farmer income has fallen off a lot in the last couple of years, but business has managed to take care of itself, and for a good reason, because it contributes to and has been the engine of a market economy that's delivered output that is staggering by the imagination of anyone that might have existed 100 years ago. In my lifetime, the GDP per capita in real terms of the United States has gone up 6 for 1. Can you imagine in a society where in one person's lifetime, overall, people have 6 times the real output that they had at the beginning? It's, the system works very well in terms of aggregate output. In terms of distribution of that output, sometimes it can fall very short, in my view. But it'll keep working. You don't have to worry about that, dear. 20 years from now, there'll be far more output per capita in the United States in real terms than there is now. In 50 years, it'll be far more. And the quality will get better. And no presidential candidate or president is going to end that. They can shape it in ways that are good or bad, but they can't end it. Now, Charlie, give something pessimistic here to balance me
No,
out.
I want to say something optimistic, and I think that the GDP figures greatly understate the real advantage that our system has given our citizens. It underweighs a lot of huge achievements because they don't translate right into money in a certain way that the economists can easily handle. But the real achievements are, over the last century, say, are way higher than are indicated by the GDP figures, and the GDP figures are good. I don't think the future is necessarily going to be quite as good as the past, but it doesn't have to be.
There's no one you'll run into, at least in my experience, that says, with my same talents, I wish I'd lived 50 years ago instead, and born 50 years earlier. But a majority of the American public thinks that it's a bad time to be born today compared to when they were born. They think your children will not. They're wrong. I mean, it's the pace of innovation. Just think how different you're living compared to 20 years ago in terms of what you do with your time. Now, a lot of people may condemn it or something of the sort, but you're making free choices that were not available to you 20 years ago, and you're making them in a different direction than, I'm still staying with the landline, but you people are way ahead of me. Okay, Greg.